All right, Mark here, and welcome to another Greenbridge Investing Market Analysis. Today is Wednesday, and we're going to be going over Bitcoin, the major markets, and a couple of stocks on the radar. Now, I invited members here so that we can have an interactive section. I'd like to do these every once in a while. All right, so let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so let's begin with Bitcoin. And let's take a quick look here. I don't want to spend a lot of time because it's really not doing a whole lot. Now, keep in mind, I want to keep this session about 15 minutes. You know, I can talk about this stuff for hours and hours, as you know. So let's take a look here. And as we can see, we have some hesitation, right? We have this red candle off of an important resistance area, this 7,300 to 8,000 resistance zone. Now, again, bears that are reactive, that are following their 5-minute charts and all that kind of stuff, sure, they're going to get short something like this, but this is not a short. All right, first of all, there's no sell signal. Is this candle a setup for a sell signal? Not even. A lot of times when you get these little tiny candles, these dojis or these indecisive candles at a resistance and it continues to linger, that type of indecision is a sign of hidden strength. So there's really nothing to do here. In fact, this can turn into a continuation pattern if we take out this high, which is the 74.25 area, 74.25 area, but of course we need the candle to close. So with that being said, there's really not a whole lot to do. But watch this thing and let our swing trade play out like we do. Like I've been writing in the chat room and stuff, it's usually a lot of times it's better to not interfere with the trade and let the market determine the outcome of the trade idea. A lot of times it will go your way, and there's a lot of occasions where you may get faked out or you react to something and you get out of the trade and it was a much bigger winner and then, why did I do that? So don't let human nature get in the way. All right, let's get into the next market here. I want to talk about the Nasdaq, and same situation here. Let me pull up my CFD. Okay, it was looking bearish at yesterday's close. People were saying, oh, we're pulling back, blah blah blah, right? Bearish pin bar. Sure, I can't argue with the bearish pin bar, but guess what? The bearish pin bar never triggered. Okay, so the low around that 79.60, or we can say 79.5 area is still in place, right? And now look at today's candle. So again, for people that react, people that watch too much news, people that are caught up on blogs and other irrelevant information, they get short, and now they have to watch their position in the red the whole day because now they have to take pain. Okay, and if this thing continues to push, you're looking at the 8,500 area as the next resistance, or even higher. I'm pretty confident with this because this higher low is a pretty telling sign, and we have the follow through of the higher high, and we're not pulling back. Okay, I mean that's what the market's saying. If we do pull back, the level that I'm looking for this thing to hold is this 76.65 area. Okay, this is the key support that this market needs to hold in order to maintain this bullish structure. If we close below this 76.65, if we do something like that, then that would tell me that we're more likely going to be in a range, and then it would be reasonable to test the 7,400 support or even the 7,000 support. That would be much more reasonable in that scenario. But as long as we stay above this number, even if we pull back to it and we kind of fool around with it and then we get a buy signal there, that will just be a continuation pattern to go long. Hey Ankit, how you doing? Thank you for joining me. Okay, so I'm just finishing up the Nasdaq here. Feel free if you have any questions to ask along the way. Again, I'm trying to keep this at around 15 minutes. Okay, so now let's go take a look at the DAX, right? Because usually after that, look at the Nasdaq. I take a look at the DAX. Yeah, I covered Bitcoin. It's the first thing I usually cover. So you can watch once I'm done with the video, you can just play it again and you'll see it. But if you have questions, you can ask. Let me just do the DAX, and if you have questions about Bitcoin, I'll go back to it real quick since you took the time here to join me. So what I usually say with the DAX, this thing follows the S&P and the Nasdaq. It's always the same deal with this thing, right? So with that being said, the levels aren't going to be as meaningful, or the price structures or the signals that we get on the DAX are not going to be as meaningful because we get our lead from the S&P and the Nasdaq. So if they're going higher, I don't care what kind of candle you have here, it's going to go higher, right? That's pretty much what's been going on. So, the DAX also confirms what's been going on, with the U.S. markets. We have the higher low, right? Clear-cut higher low, and we've made the higher high. And we're holding, right? We're not swiftly pulling back. Usually when you get a fake out at one of these fake out resistance levels, it usually occurs quickly. Prices do not linger at resistance levels, right? Now, keep in mind, too, we have a very stimulus-like environment. We have all this money pumping in from all corners of the world. Everyone's printing money to try to stabilize things, right? And the market is going to feel that. So that's what's going on here, I believe. So as far as the levels go, yeah, this thing is strong. Are you going to buy the DAX now? I wouldn't buy it. You have to wait for a pullback, just like in the S&P or the Nasdaq. If you're interested in the CFDs, there's really nothing to do here. If you are in European denominated assets, well, there's nothing to do but hold, right? Because this thing is now in a clear position of strength. We have a push off the low, a dramatic push followed by a higher low. You can't ask for anything more than that. I mean, that's a sign of stability right there, and an optimistic sign. All right. If anything, the market, I say, goes into a range. If we get a nasty pullback, we go into a range. I think it just seems to be a low probability that we go to new lows. All right. Now let's move on. Again, any questions, guys? Just ask along. While I'm moving along here, no problem. All right. So let's get into oil next. All right. Now, oil is something that we've been watching for a swing trade, and it never triggered. Okay. But let's take a look at oil here. We were actually looking at a swing trade long, right? Let me make sure. Is my oil chart? Yeah, that's the right chart. Okay. So, here's the thing. So people can argue and say, why would you go long oil when it's bearish, right? Is oil still bearish? Well, yeah. The bigger picture, this larger structure from this 65 high to this $20 or $18 low or whatever that is, yes, that's bearish. Is this a lower high within a bearish structure? Yes. Should we have taken the short signal here? Because there is a sell signal there. Well, here's where our discretion comes in. The reason why I'm all for longs and not shorts is the location, number one. How often is oil at $20? Can this thing go to 15 or 10? Anything is possible. But the thing is, it came off of a low, and not only did we come off the low, but we came off in a very dramatic way. This 18, whatever, right? What is that? 18, basically hot 19 low to this high over here of 28 in a couple of days. That's very dramatic. And usually when a reversal begins, a trend reversal, it usually starts out with a very strong initial move, right? And that's the way I'm looking at that. So if anything, I want to look for the follow through for a long. I want to look for the consolidation and the continuation pattern for a long, not a short at such a location. If we were fooling around a major resistance, sure, but we're not. We're fooling around a potential bottom of oil. Okay, now here's the thing. Our key resistance is at 36. So we can fool around. We can make a higher low and push higher and blah, blah, blah. And we could stay range bound, all right, until that 36 is cleared. Now, also, it's possible to make a new low while that 36 level is still intact. So we have to be open to it, but we are going to use our discretion and say, hey, look, oil's at a pretty major low. Why would I want to take short signals? Unless you're day trading, which is a different story because it's a different reward risk model. For our types of trades, swing trades and position trades, short just does not make sense here, okay, because the potential is small compared to the long potential. All right, so that's pretty much our position on oil, and we're going to keep an eye on that for another swing trade long if we get this nice inside bar close that can prompt us to send out something like that. Okay. All right, so now let's move on here to I wanted to take a look at gold, right? Let me go to gold because gold is also in an interesting situation. So we talked about gold, right? If you listen to the podcast, we talked about, Andrew was partialing out on gold, meaning taking some profits, locking in some profits at these levels. Why? This is a triple top resistance, right? I don't care what the environment is. I don't care what the fundamentals are. I mean, they do still favor a strong gold, but why would you buy at a level that promotes selling, right? So we had selling pressure come off of this 16, what is that? 89 level, right? We had the 1700 level, almost 1700 here, and then we revisited that 1670s again. This is a high risk area to put on longs. This is where retail traders who are not aware of what's going on, or who don't have a solid set of rules to make these judgments, they just jump in because it feels right, or because they read a newsletter that said gold is going to 5,000 or something like that. Meanwhile, they're buying a short-term top. Why? Okay, so gold would be much more attractive if it can pull back, even if it corrects some of this structure here, right? From this low, 1575, to this 1675. Even if it can give us a halfway point or something there, that would be much more attractive than buying it now. So it's not like gold is, we wouldn't short gold, but we have to wait for a reward risk that makes sense. And that's how we filter a lot of trades. Even though this may be strong, who knows, maybe this thing will gap and go higher for some whatever reason tomorrow, but the reward risk doesn't make sense. And that's all we're interested in, right? Because that's how you build consistency. So that's gold. Now, let me jump over to the stocks. Do you have any questions so far about anything that I've covered? And you know what I'm going to throw in there before I jump into the stocks, actually, we can talk about the pound real quick, because we did send out a swing trade on the pound. And one of the things Andrew mentioned about this was the stop was extremely wide, like 300 pips or whatever. And that's because, you know, we have these wide range candles. And when you're in these type of situations, you have to, or it makes sense to take smaller risk by compensating with the size, right? That's why we won't think of anything more than 1% in these situations, because if this thing pulls back, you're talking about hundreds of pips. Now, this thing is in a position, obviously, we have a nice clean cut higher low, and it's in a position to make that higher high. It hasn't gotten there yet, but that's what it's in position to do. So that makes sense, all right, in terms of the price structure. It's just the reward risk, you have to adjust for those really wide moves. And that's how we do it. So I just wanted to throw that in there. All right, so let's jump over to the stocks. Now, the first stock I wanted to talk about really quick here was IOVA. All right, let me see. Do I have it on this chart here? No. Let me go on my other list. Okay, so here, IOVANTS. Now, a lot of stocks, you know, are some of them are in very mixed positions, and some of them are relatively stronger than others. IOVANTS is one of those stocks that happens to be holding up very well, even when we saw that bearish candle yesterday that appeared in the Nasdaq, right? And a lot of stocks were starting to lose their relative weakness, right? IOVANTS is still holding. The key level on this stock is this 28, basically, 28 level, which it held very nicely during the pullback. This is a clean cut higher low. And now look, we're getting this inside bar. And this structure tells me that there's a better chance that we test this high right here, which is 33.5, and we push higher, because where there are higher lows, they are theoretically followed by higher highs. Now, the main resistance to keep an eye on would be this 38 level or 39 level up in this area. That would be a good place to take profits if you get this breakout. So, you know, this is one here where if this can turn into a continuation pattern to add more shares, this is a more conservative place to add more shares if you own this one, because you know, the aggressive place to add shares was during the pullback, because you don't know how far this thing's going to pull back, right? And then you get this bounce. So yeah, you can possibly add shares during the bounce, but that's also risky because you don't know where it's going to bounce. You don't know if you're going to get a lower high followed by a lower low. You don't know. But now we have a higher low in place. So that gives us a little bit more stability and certainty. So adding shares now is more conservative. Yes, you don't have the best price, and you may not see these great prices again, but at least you're buying during a stable time, a much more stable time. That is what the chart is telling us. Can things change? Of course they can. And that's why we always encourage small bites all along, so that you don't get caught with something too big if this thing decides to have a sharper than expected pullback, which can come out of nowhere, right? I mean, that's the way it is right now. So, but based on the structure, you know, we're anticipating more stability in something like this. So that's IOVANTS, and that's definitely on the radar for an ad. Now, any questions? Anyone? Any questions real quick? Because I'm about at that 15-minute mark here. Any questions about Bitcoin real quick? Want me to cover? So, you know, you guys have been very vocal in the chat room. It's great. So if you have any other questions, please share them so that we can answer them, whether it's in the chat room or in these videos. I like to share these videos, you know, and do these interactive sessions. I said, like I said, once in a while, to give people a chance to ask me questions as I'm doing it, right? And maybe provide you of more insight than just giving you some sort of general explanation. All right, so no questions? All right, well, thank you guys for taking the time here to join me. I'm going to wrap up this video now. For those of you that are watching it afterwards, again, thank you for watching it. And again, if you have any questions, please share in the chat room or ask or send us an email. Have a great day, everyone, and I'll speak to you soon. Okay, no problem. All right, take care. Bye.